All right, cool. So before we get into the conversation of value versus growth investing, I'm going to go ahead and take a look at some news to see if we have any reports, or not news, but the economic calendar, to see if we're running into anything major uh, this week. So let's leave this page, calendar, the economic calendar, and we need this week. All right. So it looks like Monday we don't have anything major. Tuesday, nothing major. Wednesday, we do have FOMC minutes. For people who've been in these sessions before, I always like to tell the group that pay attention to anytime you have anything related to FOMC as far as meetings or minutes. And the minutes are just the notes from the previous meeting, because they can give you a clue into what the Fed speakers are thinking and what's going to happen next. So FOMC minutes that comes out on Wednesday at 2 p.m. is going to be pivotal. If they're still going in the same direction as far as rate cuts, and if we're still getting 0.5 rate cuts, that's going to be great. We should see the market spike to the upside. But then if we see some news about the Fed's kind of being cautious or hesitant, that could give us a reason for a pullback. So Monday, Tuesday, if you're in trades, it's all good. But Wednesday, I honestly would say 1 p.m. Eastern Standard, I will watch out, because going into these meetings and going into anytime Jerome Powell is speaking, the market dips for about an hour, and then it comes back up until we can actually digest what is being said. So circle this one on the calendar. Thursday, we do have some more reports that should be important as well. We have some inflation related reports that are coming out at 8:30 a.m. So this is for my option traders. This is before the market even opens. So whatever happens Wednesday after 2 p.m., be careful, because if it goes up, this report could send it back down. So we may see some whipsaw happening this week, especially when it comes to the major indexes, the SPY, the Qs, so on and so forth. And then Friday, we have more inflation reports. The PPI comes out at 8:30. So the beginning of the week, smooth, easy trades, nothing really crazy as far as scheduled reports. Once we get past Wednesday, that's when it gets a little interesting. We got FOMC and then 2 days of inflation related reports that are coming out. So as long as inflation is continuously heading down, the Fed shouldn't have a reason to pause or shrink the size of their rate cuts. So this is going to be key to figuring out if we're going to, well, I know we're going to get a rate cut, but how large of a rate cut we're going to get next. So watch out for these. And let me turn this off real quick. Yeah, we do have some Fed speakers right here. 1, 2, 3, 4. But I don't think it's anything major. I don't see any Jerome Powell. Tuesday, few Fed speakers. So this is a Fed week. Yep, Wednesday, Fed speaking. Yeah. Sheesh. Yeah, so the Feds are speaking all week. But again, the major things that I'm watching out, especially for my people who again trade options or who are swing trading like growth stocks, watch out for these reports and the FOMC minutes. Do I have any questions on any of this? Oh, did not mean to do that. Questions? All righty, I'll take silence as a thumbs up. We're good to go. All right, I always like to check this before I head into my week. I just need to know what's the vibe for the market so I can figure out how to place my trades. But it looks like everything is good to go. All right, let's talk about value and growth investing. So value and growth investing, I would say you should be doing both. If you're more on one side, I know for my younger investors, you're going to be growth investing because you're looking for those multiples. You're looking for the next Tesla, the next Nvidia, the next, high flying stock. And then for my, I also know some young investors that prefer value investing because it's just safer, in their opinion, and it's easier. They don't have to watch it as much. It's not as volatile. But the difference between the two before we get down into the nitty gritty of like how they actually work is, one, value investing is pretty much finding great companies that have like a proven track record that are at a lower valuation, right? So let's say if you found a company, let's say if you're looking at Microsoft, right? And Microsoft is $400 a share, but once you look at your metrics and your data based on value investing, you figure out that, oh, okay, actually Microsoft being at $400, it actually should be at about 650, right? Microsoft is a slow grower. It's not going to double, triple, quadruple like we've seen from NVIDIA. So, I mean, it can have growth tendencies, but normally it's a value stock. It pays dividends. It's been on the market for a long time. But again, when you're looking at that, at a company like that, you're looking for the value in that company. It's kind of like the Warren Buffett style of things. That's how I like to put it. Warren Buffett, I would say he is more of a value investor because he wants to find a great company at a great price. Right? A lot of people will look at Microsoft. They don't even know what it's really worth. Just throw their money in there and hey, it is what it is. But with value investing, again, you can look at Microsoft. If you want to stay away from tech because you think that tech as a whole is more growth, then you can look at companies like Coca-Cola, which that's what we're going to be looking at in a second as an example of a value stock. You can also look at PG. You can look at any of the, if you're into dividends, look up the dividend kings and aristocrats. Pretty much the top 20 on both of those lists are probably going to be really good value stocks that you can buy. And with those companies, what you want to do, again, even though they're value companies, they're slow growers, you still want to find a good point to get in. For instance, Coca-Cola, what is that? Coca-Cola is currently at $70. I remember when Coca-Cola was at about $35, $40, right? And so it took some time for it to get to about $70. It took maybe 4 years, 5 years to get there. And of course, there's other stocks that you could have picked that, you know, NVIDIA, Tesla, so on and so forth, that in that same time, 5x, you know, 6x, 10x, so on and so forth. But the risk and a safety margin is a little different. With Coca-Cola, they own 30% of the beverages on the planet. And I mean, it's a safe bet. They also pay dividends. So anytime you see Coke on a pullback, they're pulling back, you can go ahead, buy in, you know, and take it to the upside. So that's the gist of value versus growth. Again, growth is just going to be those high flying stocks. Everybody's talking about them. They're in the news. You might have a lot of contrarians going against the stock too. Like they're looking at the stock. For instance, NVIDIA is one that a lot of people are saying, oh, it's going to go back to $20 or so on and so forth. That's more of a growth story versus a value story. So, all right, let's get into the technical definitions really quick. All right. So the definition here is value investing is an investment strategy that involves picking stocks that appear to be trading for less than their intrinsic or book value. If you don't want to run calculations, which I mean, I think we're in a tech age, so I don't think actually sitting down and using pen and paper or, you know, running the Excel spread to run the actual value of the stock is necessary. There's a lot of platforms out there that you could use that will give you these numbers that you're looking for. I recommend doing it that way just because it saves time. And if you're going to go on a hunt, you may look at 20 stocks. You don't want to actually, you know, have to write every single thing down. So I recommend just getting a platform that can give you that information and then picking based on the intrinsic or book value from there. And then, like I said earlier, Warren Buffett is probably one of the best known value investors today. There's a whole bunch of other value investors, Benjamin Graham, Charlie Munger. Yeah, I mean, the list goes on and on, but they're extremely rich. It worked out for them. And, you know, I hate when people get into this conversation that one is better than the other. I really think it's just a matter of preference, right? Like it's comparing apples to oranges. Apples aren't better than oranges. It just depends on what you like. You like apples? Cool. Doesn't mean that one is better than the other. It just depends on, I guess, your personality and how you assess your risk tolerance, how risky you want to be. Key takeaways: value investing is an investment. We already talked about this. Value investors actively ferret out stocks that they think the stock market is underestimating, right? So again, like I said, first example, Microsoft, let's say it's $400 a share. When you actually look at it, it should be about $600 a share. That's one of those stocks that the stock market is underestimating. You buy, you hold, and you know, you just wait until it hits 600, take profit and keep it moving. Also, value investors use financial analysis. So a lot of the time, the people here, we trade, we use technical analysis. When you're picking a value stock, looking at a chart really doesn't matter. Can you look at it? Sure. But if you're trying to find the value in it, again, you may want to use your brokerage or one of your stock trading platforms to give you that information. And I mean, if you don't trust the information from one source, you can always compare it to multiple sources. One of the sources that I like to use is Simply Wall Street. Simply Wall Street is great for just analysis of any kind. I will also recommend Macro Trends. Macro Trends is a little old school, but it's a good place to compare, information that you found elsewhere. Getting tongue tied, but yeah. Again, value investors are going to use financial analysis. Oh, someone's posting in the chat, and they don't follow the herd, and they're long-term investors of quality companies. So again, this pretty much sums up what a value investor is going to be, and how they're going to do, their run their trades. Let me see. You have some questions in the chat. Hard to trade macro trends to be very long terms. Yeah. So when you're looking at macro trends and long term, I won't say that it's like this. When I think about value investing in value stocks, right? For instance, Coca-Cola, they own 30% of the beverages on the planet. Do we think that Coca-Cola is going to go out of business anytime soon? No. A lot of other companies will go out of business before Coca-Cola goes out of business, right? Could it happen? Sure. But if you look at the financials of Coca-Cola, they have a really strong balance sheet to where they can actually afford to pay dividends at the clip that they've been paying for like the last, I think they've been paying and increasing dividends for the last 60 or so years, maybe 70 years at this point. So when it comes to that, and looking at the long term, it depends on what's long term to you. Long term to someone maybe 5 years. But then when you compare it to someone else, long term to someone else, maybe 30 years, right? So when you're looking at a 30-year layout of a company and your value investing, that's why picking a growth stock but trying to use a value investing strategy probably wouldn't work. Like when I look at what's a hot stock, a firm, right? I'm looking at a firm and I'm thinking 30 years down the road for a firm is like, nah, that's pretty much impossible to predict. But if I'm thinking 30 years down the line for Coke, 30 years down the line for Procter and Gamble, 30 years down the line, it's a different, again, Coca-Cola has been paying and increasing dividends for the last 60, 70 years. They probably can keep doing it for the next 20, 30 years, unless something crazy happens to our economy. But yeah, last 70 years, we've had world wars, we've had stock market crashes, we've had a whole bunch of things happen, but Coca-Cola was still able to, to pay out those dividends at an increasing clip and an increasing rate. So I agree, it's hard to trade it, depending on how you think, but it also goes with which stock you pick. You pick a great stock, it'll make it easy for you. You pick a tricky stock, it's still going to be a tricky trade. So Ross, I appreciate that. But yeah, again, just to double back one more time, value investors, remember, financial analysis, not technical. So you may be looking at a stock. Like when I first started trading, I'm gonna tell you something funny. I tried to trade options on, what was it, Procter and Gamble, and I set it out. I said, okay, it's $90 right now, and it can be 120 in 1 month, because I looked at the other stocks that were going up. I had no idea that stock was not going to move that fast. So I bought an option and stretched it out for about a month. I said, okay, it should go up, about $30 because the whole market is running. Procter & Gamble went up $5 in a month, which is actually good for it. But I was detached from reality and understanding that when you're looking at a value stock, they don't move like a growth stock would. And so, of course, I blew that trade. But I like to tell people, like, when you're looking at these companies and you're going into trade, if it's not a company that someone else picked and already vetted for you, in that case, I would still vet it. But if it's a person, if it's a trade that you trust, cool. But if you're doing it yourself, check to see how that company moves in the past. Like, if you're looking for a $20 move, over the next month, Has it ever moved $20 in the history of the stock, right? And also, has it moved $20 in a month over the last year? Is it possible? Anything can happen. You have history made every day, but you want to make sure you take that into consideration when you're, especially for my people who are trading options, and when you have time decay being one of the enemies of the trade for you. So, all right, I'm not going to go through this whole article because I do want to get to some picks. But again, it just covers intrinsic value and value investing. Again, it gives you the different pieces. If you want to look at price to book, price to earnings, free cash flow, they actually have indicators like FCF, which is free cash flow for TradingView. So they have a lot of this information that's already in TradingView for different stocks. So if you pick Coca-Cola, you can find the price to earnings, PE ratio, price to book. And again, if you don't have access to TradingView, go to Simply Wall Street. Simply Wall Street can give you the share price versus the fair value. The fair value for Coca-Cola is $94 based on their calculations. You can also get, if you want to see how they calculated that, you can get into the data and break down the metrics and things of that nature. They also give you the key valuation metrics. You got your PE ratio here. You also have the PE ratio as compared to other companies that are related to this stock. So Coca-Cola, you got other beverage companies, Monster, Pepsi, Dr. Pepper, so on and so forth. And it will tell you if the PE ratio is somewhere near or in the ballpark of their peers. And you can see for Coca-Cola, it is actually around the area of its peers. You got Monster a little bit higher, you got Pepsi a little bit lower. So it's still not astronomically high. It's on the high end, but it's still not unfathomable. So that's why I say, again, platforms like Simply Wall Street can help you with that if you're looking for a value stock. And again, some people say, well, why would I look for a value stock when the money is slower? Sometimes your portfolio may need some stability. A lot of times when I have these one-on-ones with people and we're looking at stocks and we're trading, they're only thinking about growth. But it's like, what happens when you have a bear market, right? A bear market crushes people because they're only thinking about the upside. The bear market in what was that, end of 2021 going into 2022, the top earner that year was Warren Buffett, simply because he did not lose as much money as everybody else. Elon Musk, Bezos, Zuckerberg, all of them lost hundreds of millions, billions that year, and Warren Buffett actually was on top just because most of his portfolio was value stocks. So, and again, that year was a bear year. So you want to build your portfolio to where it can withstand the test of time. Sometimes people are all growth, and then you get a bear year and it just completely trashes your portfolio because you have nothing in there to stabilize it in a downtime. So I recommend when you're building your portfolio to have a little bit of both. Again, the first stock I think you should buy, in my opinion, is the SPY. I love the SPY, but the SPY will give you that level of stability, and it also has a lot of value and growth stocks that are added into it. With that being said, do I have any questions before I move over to growth investing? Questions, comments, concerns? All right, I take silence as a thumbs up. We're good. All right. Talks about margin of safety. The last thing I wanted to look at, let me see. Nothing too major that I want to touch on that I haven't already touched on. But I do think that if you're interested in this, value investing strategies would be good to read really quick. It's really short, three paragraphs. It talks about the different strategies, and then you can also read about why the stocks become undervalued, market moves, herd mentality. Herd mentality is one of the things that drive the market, especially in a bull year like this year. Herd mentality with AI stocks was crazy, almost uncontrollable, to where everyone's just buying AI stocks. Half the people that are buying the stocks don't even understand what the companies produce or how the AI actually works. They're all thinking it's just Chat GPT related. But herd mentality is one of the things that breaks the market. And then also, again, when you move into a bear market, herd mentality is another thing that kicks a lot of people out of the market when a bear market is the best time to be in the market because everything's on sale. But yeah, I think this is a few good things to read. Market crashes, so on and so forth. All right. We already talked about my example of a value stock that I would recommend. Coca-Cola is great. I know Mark is a big fan of Coca-Cola. I think this is Mark's favorite stock. He always talks about Coke. But yeah, Coca-Cola, great stock. Again, 30% of the liquid, pretty much, or not the liquid, the purchasable liquid on the planet as far as beverages, Coca-Cola owns in some form or fashion. But yeah, Simply Wall Street is good. If you don't like Simply Wall Street, again, macro trends. We have another question. Buffett sold all of Bank of America and 50% of Apple. What is that indicating? If I could see the future, I would tell you. I don't know why he sold all of Bank of America. And I mean, he's sitting on 300 billion cash, or they are sitting on 300 billion cash. It's not like in his bank account, but the 300 billion cash, I think that they're going to make a large purchase or help buy some companies later on. I'm hearing a lot that they could be taking profits to help buy Intel. I think Intel could be one of the stocks that they invest in because Intel has been, they've been giving Intel the business lately. And I think that Warren Buffett, with the position that he's in, the portfolio of the companies that he has, he could help Intel, make a turnaround and have a great recovery story. But selling all of your Bank of America is definitely a red flag. I don't know what's going on with Bank of America, but I think as we continue to get these rate cuts and we see how they affect or impact the banking sector, I think that's going to show us a lot. Because again, if you're making a move like that, Buffett knows more than we know. Of course, he has access to whatever he wants. It's a phone call away. 50% of Apple, honestly, that 50% of Apple that he sold, I think that comes from Apple. One, the iPhone 16 is trash. iPhone 16 is the iPhone 15 with promised AI capabilities that I think they kind of overshot on. But then you're not even going to get the full AI capabilities in the iPhone 16 until like March. You're slowly going to get batches and updates, but you're buying a phone in what, September, October, and it's not fully ready until March, which is, people are like, nah. And another thing is that Apple hasn't been talking about their headset, the $3,500 headset that they brought out that was supposed to be they're calling the next iPhone, the next big seller, but it's actually trash for 3,500. And then you also have Meta, who's eating their lunch in that sector, and they're selling their products same caliber and quality for $500 to $1,000. Just not a good move from Apple. And Apple hasn't been innovative in like the last 5 years, if you ask me. So I think that's the 50% of Apple, because we could see Apple pulling back. Ty, you have a question?
I think it's the growth potential of Apple. I don't think it's there anymore. Like, I don't think Apple is going to double from here. Do you know what I mean? Like it will possibly, but it'll take a good couple of years. So I think he's had a really good run with Apple, and like he bought Ulta Beauty. Like, I think he's just they love to raise cash. That's part of their strategy, right? That's one of the core tenets, is to raise cash and then to invest in companies that are growth companies. So I think that's part of the strategy. They've held Apple for too long, and it's a mature company. That's my thinking, anyways.
Yeah, no, I agree. I think Apple is again, like I said, last 5 years, Apple hasn't been innovative at all. Samsung has made I've seen a whole bunch of crazy phones and designs and things of that nature, and Apple is just playing it safe, but they're steadily increasing prices. So I think people are just tired of it, to where it's like, okay, you can play the dumb consumer game for a while, but after a while, they're like, all right, I'm taking my money elsewhere. I'm not spending $1,000 for an iPhone every year, and it's the same exact phone as last year. And you're promising me these upgraded capabilities, but those capabilities you can't even really see in the phone. Like, the screen may be it may process data a little quicker, but at this point, we have so much tech that it really doesn't even matter. Like, processing the image 15% quicker than the last phone, to the untrained eye, you really don't even care, or you can't even see it. So using that as a selling point, Apple yeah, they have to figure out what to do next. Also, for my Apple investors, Tim Cook, what did he sell? Like 50 million in Apple shares. So just yeah, you got Warren Buffett selling 50% of Apple, and then you have the CEO of Apple selling about 50 million in shares. So yeah, we may not see Apple surge as it should until the iPhone 17. I'm hearing the iPhone 17 is actually going to be the one that everybody's excited about, and the 16 is just a stopgap along the way. So, but we will see. Also, they should be bringing out a cheaper headset, so then people can actually get it and test it out, because nobody's spending $3,500 on a project that Apple just kicked out and is still working on. So, all right, growth investing. All righty. Oh, they took the definition part out. All right, well, let's read this. All right, so growth investing is an investment style and strategy that focused on increasing an investor's capital. So again, when you're growth investing, you're not really looking for the Coca-Colas of the world. You're looking for the Teslas. You're looking for the Nvidias. You're looking for the Meta. Like again, the beginning of this year, Meta was under $400. Now Meta is knocking on the door at $600, right? So you're looking for companies like that when you're a growth investor. And the next part, growth investors typically invest in growth stocks. This is young or small companies whose earnings are expected to increase at an above average rate compared to the industry, sector, or overall market. The only caveat that I would say here is that it does not have to be a young or small company, in my opinion. Again, is Meta, I mean, compared to Coca-Cola, Meta is a young company, of course. But is it a small company? No. That is definitely not a small company. So it doesn't have to be young or small. There are some older companies that, they may get a new CEO, or they may dive into different sectors as far as solar power, EV, whatever, that changes the trajectory of the valuation of the company and places it in another sector. So again, if you're a growth investor, you're looking for the high flying stocks that are going to move fast and grow fast so you can make your money and move on to the next stock. A lot of growth investing too, you have to be careful with, because with growth investing, once you pick that stock, a lot of people will go long or say, okay, this stock that I have, I'm going to hold it for 20 years. So you're having a value mindset with a growth stock. Like I had that conversation about Tesla. Tesla is now just breaking out of the zone that it's been in for the last few years. And let me show you what I mean. So Tesla is a growth stock, of course. Young stock. Is it a small company? No. One of the biggest one of the biggest publicly traded companies on the planet. So if we look at Tesla, let me take all of this off. We look at, actually, this is on the 4-hour. Here we are. All right. So we look at Tesla again. This is an example of a growth stock. Like I said, with value stocks, technical analysis may not help you that much. So if you're looking at the chart for Coca-Cola in this perspective, it may not help. But looking at the chart like this for a company like Tesla actually works, because let's say the story started here at about $100, just to make the math easy. You bought Tesla here in 2020. This is July 2020. You bought it for $100. Tesla went on a crazy run. Tesla at this point was at what, $300? So you're 3 times your money. Tesla at this point was at $400, so you're 4 times your money. That's only in 1 year. This is November of 2021. This is July of 2020. So in 1 year, you 4 times your money, right? You went from 100 to 400 in this area. The thing about growth stocks is that pop that you see for those growth stocks, you have to know when to get off the boat, because it's not going to continue to happen at that same clip. There's always going to be a stagnation period, and then it can take off again. Like right now, Tesla is in that stagnation period to where it can go back up to the highs of 2021, 2022 before the downtrend, but it has a point to prove at this point, because investors are like, hey, Tesla's been, again, we're just talking about the people who bought at 100, but let's say you bought at 260, right? Tesla's at 250 right now. If you bought at 260 back in February of 21, you're still down. You had a chance to get out here, somewhere in this area, but if you bought back here in February or January, today you're down $10 per share still. So that's why I like to say when you're dealing with a growth stock, have a growth mindset, right? Know where you need to get out, and also know like where you need to do what you need to do with the money. And then with growth stocks, you also got to pay attention to the marks that are being put forth that they actually have to hit. Like Tesla, the fact that Tesla started to reduce the price of their vehicles meant that the profit margins that was helping the stock increase, you're not going to see that anymore, right? So you're looking at a Model 3 go from 50K all the way down to 30K. That's a $20 decrease. Even though they sold more, the profit margin is still less, which doesn't help the stock. So that's why we were seeing this with Tesla, which was one of the most notable high flying stock that brought EVs. In my opinion, it brought EVs to the world. You had other EV companies, but people know about EVs mainly because of Tesla. But it's having some issues, still struggling, still at the same price that it was, 4 years ago. And there's other companies at the same time that are 5-10 times, the actual price that they were back in 2020, 2021. So this is one issue that you can run into with growth stocks, is not knowing where to get out. All right, back to the technical side. All right, so growth investing is highly attractive to many investors because buying stocks in emerging companies can provide impressive returns as long as the companies are successful. However, such companies are untried and thus often pose a fairly high risk. Right. The difference between the two, again, growth and value, is that it's the margin of safety. How safe do you want to be? So anytime someone talks to me and they're telling me their entire portfolio is growth, I'm like, okay, if the market flips one time, your whole portfolio is underwater. So that's why I recommend having a balance of both value and growth. Honestly, I think that value should be the bedrock, and then you can have those growth stocks that are running. As they run high, you're getting 5-10 times your money. Go ahead and shave off. You can and then put those back into those growth stocks. I'm sorry, back into the value stocks while they're down. All right, last paragraph that I'm going to read. Growth investing may be contrasted with value investing. Value investing is an investment strategy that involves, so we already talked about this, same thing. So you, again, remember, you don't have to be one or the other. You should be both. But a lot of people just go with growth investing because that's what the media, that's what the news, that's what social media is cramming down your throat. Tesla, Nvidia, they're just giving you all the high flying stocks when really you need some value stocks as well. Honestly, again, if you're going the Buffett way, you may have way more value stocks than you have growth, and that's the safest way to invest. And that's the safest way for your portfolio to stand the test of time. All right, key takeaways, and then we're going to look at Nvidia real quick, and then we can go back to our normal programming. All right, so key takeaways: growth investing. Growth investing is a stock buying strategy that looks for companies that are expected to grow at an above average rate. This is the thing, at an above average rate. So again, if you got the SPY growing at 20% this year, a growth stock should be 50, 100. Some stocks you may see, we were just looking at some stocks last week that 150, 200% on the year. So above average rate, that's how you're going to know that this is a growth stock. And then again, growth investors tend to favor smaller, younger companies. They don't have to necessarily, again, tend, not necessarily they have to be smaller or younger companies, but they're looking for the expand and increasing profitability potential in the future. What are the multiples that the company is going to print for you? And the last bullet, growth investors often look to 5 key factors when evaluating stocks: historical and future earning growth, profit margins. We just talked about profit margins with Tesla, returns on equity, and share price performance. Honestly, I think that if Tesla doesn't kick it into gear, that they're eventually going to start to offer dividends to make the stock, more look more appealing to value investors and turn that corner. Because at this point, if you added Tesla to your growth portfolio, this year Tesla has sucked as a growth stock. So I think the profit margins is probably what's killing them. Again, anytime you're shaving $20,000-$30,000 off of a product, then the stock, of course, is going to suffer. But yeah, those 3 key takeaways. Again, if you want to read about this stuff, I put both of the links in the chat. And if you have any questions, just let me know. Really quick, we can look at Nvidia. This is the growth stock of the year, if you ask me. The thing here, they're talking about the earnings are forecasted to grow at 22%, and earnings grew 419% over the past year. Again, this is how you know you're dealing with a growth stock versus a value stock. Look at this, 500% or barely over 400%, sorry, over the past year. So in 12 months, that's crazy. That's ridiculous. And then when you go down, you can look at the PE ratio, of course, higher multiples, price to share ratio, higher multiples. And then you can look at valuation. And then when you look at the share price versus the actual fair value, you can see current price versus fair value. Fair value or book value is 92.30, and the current price is 124, which is saying that it's 35.3% overvalued. So again, Simply Wall Street helps out with all of that, but we just wanted to bring this information to y'all because a lot of people don't know the difference between growth and value. So hopefully y'all took something from this, and you can look at your portfolio in a different way and build it to survive the test of time by adding both of these, growth and value stocks. Let me check the chat. Geico is terminating their insurance coverage for Cybertrucks. Yeah, that wouldn't help either. Yeah, if Geico is terminating their insurance coverage for Cybertrucks, we may have an issue again for Tesla on that front. But we'll see. I haven't read any articles about that, but I'll take a look after this meeting. All right, cool. Do we have any lasting questions before I pass it over to Mark and he can look at the tickers y'all posted in the chat? Cool. All right, I'll go ahead and pass it over to Mark.
All right, appreciate it. Give me 1 second to share my screen. All right, so let's start off with Sun. Okay. And so looking at Sun, let's draw out some support and resistance lines. Of course, we are on the weekly time frame to start off with, just to gauge overall how it's moving. So the current price is $54.42. We can see that it's currently testing this 20-week moving average. So that's going to be our first level of resistance. If it was to break above this 20-week moving average, the next place is going to go and try to test is going to be here at about $56. And that's because that's going to be our 50-week moving average, okay? So that's why we're going to be treating that as our next level of resistance. So if it was to break above this current value we have here, it's going to first try to test $56. And if it was to break above that, then you can have your next support, or excuse me, your next resistance level sitting at about $59 to $60. And let me, okay, so it's not working. So let's just get it here. The reason why I chose this 59 area is because previously we can see we had multiple tests in this area. So that's going to be a strong level of resistance to have. So if it was to break above 20-week moving average, we're going to be seeing it try to get back to 56. And if it was to break above that, we could be overall seeing this get back to 60. That may take a few weeks or a month for that to happen. But overall on the weekly, if it was trending upwards, that's where it looks like it's going. And if we was to draw some support, okay, so our next level of support is going to be our 100-week moving average. That can be the next level we can say support will be at, which is sitting at about $50. And if it was to break below that, it's going to probably come back and we can draw it really tight. We can say somewhere at about $48 would be the next level if it was to break that support at our 100-week moving average to where it's going to go and test. Overall, looking at this stock, it looks like it's in the middle, so it could go either way. I will be waiting to see which way it's going to go. So when the market opens, are we going to be seeing this open up and trend upwards, or is it going to be going down? Just because of our other indicators, we can see we're in that neutral zone or the sweet spot. It's pointing up on the RSI level. we're sitting at about $48.55, pointing upwards. And then we have the stochastic, it is in the middle. However, it has been coming from a high, so we could be seeing this try to get back to this oversold region, or we could be seeing it just flatten out here and turn around and start to trend upwards. And then also for the MACD, we're really close to a MACD crossover to the upside. So if we was to get that MACD crossover to the upside, that could catapult this stochastic RSI to go up as well. And then that could cause Sun to go up in value. So I would just be on the lookout for that. Again, if we open up green, we're probably going to have a MACD crossover to that upside this week. Just looking at the overall trend, this could be making a double bottom. And I can draw that out here. We have the first bottom. Again, it's the macro trend. So just drawing the overall trend. You see it was going down. See, came up, pulling back. And then we could be trying to see this stock price trend back upwards. And if it was, again, I would want to see it just for now this week. What I would be looking for is if it breaks above this 20-week, it should be getting to this 50-week moving average. So that's what I'll be looking at for the overall for this week. And if we was to look at the daily chart for it, just to see, again, it on the weekly looks like it's going to be bullish. We should start to see it trend upwards, especially if we had that MACD crossover to the upside. If we look at the daily, I'm going to get rid of some of these trend lines here. So we look at the daily. Again, it looks like it's consolidating on the daily. It is testing a lot of moving averages at once right now. So it's just been catapulting off of these moving averages. What I'll be looking for is, can this 20-day moving average break above these other moving averages? If we can see that 20-day break above it, then this could be the start of an uptrend. The stochastic is getting to that oversold region, and you can see our MACD is basically flatlining. It's the buying pressure is trying to cross over to the downside, and also it's trying to reject that selling pressure. So again, just be on the lookout for this one. On a daily, I'm just looking for it to break above these moving averages. So this cluster of moving averages, which probably falls along the lines of our 20-week moving average, if we can have a strong break above all of these moving averages, we're going to be seeing this stock try to get to the $56 range this week. So that's what I'll be on the lookout. And if it's going to reject it, we could be seeing this try to reject it back to $50. The support we drew on the weekly. But before that, because this is on the daily, we may see it try to, we can draw a little tighter one here at about like $52. This could be the next level to where it try to test. And you can draw a little bit lower if you wanted to, exactly at 52, because we have the testing in this area. So you can look out for that. So if it was to reject these moving averages and trend down, we're going to be seeing it get to 52. And if it was to break above these moving averages, we're going to be seeing this stock try to get back to 56. And it's looking like, again, if it's green, we'll probably see it try to trend back upwards to that 56 range. Any questions on Sun?
You got it. Thank you.
All right. Let's check AMD. And let's go to the weekly. I'm not sure the last time we charted this. Okay. All right, so AMD. So looking at the weekly, AMD, we drew it before that it was making a double bottom. We can see it's completing that level. We could be seeing AMD get all the way back to the $183 range. So we can draw our support or our resistance here at about the top of where this double bottom began. So about 182 could be where we could be seeing this get to. Once it gets to this level, I'm looking to see, is it going to break above it? If it breaks above it, then we could be seeing this try to reach back to this $205 range. If not, and rejects it, we're going to probably be seeing it try to come back down to about 154. Now, Yeah, so that's what I'm seeing here. If it breaks below 154, we'll just be seeing this get back to $143, $145. It looks like it's been the last week it was rejecting the moving averages. It rejected the 20-day moving average. So we could be seeing this calipo, and we could be seeing this try to get back to this 182 range this week and break above it. Looking at all of the indicators, this is in a nice little spot to get back to 182 and potentially continue to move up higher. Just where we have the stochastic RSIs is just a little bit above the neutral zone and it's trying to get back to that overbought region. And we have the RSI level pointing upwards inside of the sweet spot, or just a little bit outside of the sweet spot at 45 to 55 range. Is at 55.75. So it's just a little bit out of it. So you still have room to the upside for this. Pair that with this MACD crossover to the upside. This is looking like we should continue to see this trend up. This is looking really bullish to me on the weekly standpoint. So maybe in the next 2-3 weeks, we could be seeing this trend to 182, maybe even higher than that. And let's check out the daily to see.
Hey, sorry, Marcus. You said on a 2 weeks to be around 182.
Yeah.
Okay.
Yeah, so it's looking like it's looking like we should see 180. If it's trending upwards,
Yeah.
it looks like we're gonna see 182 this week.
Okay, so like if I'm buying like for options, I should buy into like 3 weeks or a month.
Yeah, I will
Okay.
always give
All right.
myself more time to get, yeah, for sure.
Okay. All right. Thank you.
All right, so let's check out the daily to see. All right, so looking at the daily, we see we had the stock started trending downwards. At the end of last week, it was red, and then it started a little bit lower and then went down. We see it tested the 20-day moving average, and from that 20-day moving average, it rejected price. So this was a strong rejection, so we can draw our next level of resistance or support, excuse me. We can call it the 20-day moving average at about 161. It'll be the next place that it'll try to come and test and see if it can reject, if it was to trend downwards. Now, if it's continue to go upwards, and we draw it out, we can see it's currently, for the daily, it's currently testing a resistance, a resistance level. And why I say this is the resistance level, just because if we go back, we can see previously we had tests here at 170 where it got here, it tried to break back below it, but then eventually it broke back up. And then also if we go back previously, we can see we had a lot of rejection in this area. And it was going down, it started to go up, tested this area, rejected it, tried to test this area again, rejected it. So this is another strong level, even back here. Price went below the resistance. Excuse me, at this point it was support. Price went below this area. When it tried to come back up, it tested this area and then it continued to go down. So that's another strong level of resistance we can draw here. So what we're looking for is, can it, from the daily, can it break above this 172 range? So if it breaks above that, again, we're going to probably be seeing this get back to 182. And it looks like it has the momentum with because it catapulted from this 200-day moving average. It's a strong level to reject. So because it reject this, if we can get it to break above this 172 range, we're going to see it get back to 182 this week. And then the moving averages, the 20-day moving average is starting to point upwards, it's positively sloping, and it's starting to cross over my 100-day moving average. So it's crossing over that 100-day, and it's going to then start to try to cross above my 200. So as long as this 20-day moving average is pointing upwards, we could be seeing this stock price on the run. And then for the MACD, we had a rejection where the buying pressure tried to cross below it, but it rejected it. So pair that with where the stochastic RSI level is at. This is also showing me that this is bullish too. So all I'll be looking for is, can we break above 172? And if we can break above 172, I will be looking for a place to if we can break above 172 in the lower time frame and stay above that area, I'll be looking for a option play to the upside for about 182. I'll probably call it 180, 179, 180 as my strike price. And then I will be in my head just trying to hold it until I see price get to 182. That's what I'll be looking at. Yeah. All right. Any questions on AMD?
No, I'm good.
All
You
right.
covered it all. Thank you.
All right. So the next one is Delta. check out the weekly. All right. All right, so looking at Delta on the weekly, it's basically in the all-time, well, not even all-time highs, but it's really close to its current level of resistance. We can see it's rejecting resistance. If we was to draw our resistance, we can say resistance is here at about $52. We see it rejected this area and it started to pull back. The next place that if it continues to go down, what I'm looking for, current price is $49. So we can probably, if it goes down, we're going to see it try to come at $45. That's where I'm going to be looking to see what happens next. Can it reject this area? If it rejects this area, then we'll probably start to see it trend back upwards. And that trend will probably take us back to like the $50 range, and if it, or $52, $50 to $52 range is where it can potentially go to if it rejects this support at 45. Now, if it was to break below that, the place that I would draw my next support is going to be my 50-week moving average, which is sitting at about $43.50. So that's the next level that it could potentially get to if it was to break below at $46 range. Looking at the indicators, they're telling me a lot of different stories at this moment. The RSI level is pointing downwards and is trying to get back to the neutral zone. I have my stochastic RSI is in the oversold region, so that's getting close to, overbought region. So this is probably needs to cool down as well. However, that MACD crossover to the upside is what's keeping me from wanting to say that this stock is going to continue to go up, looking at like where the stochastic is at and where that RSI level is at. It's keeping me from wanting to say that it's going to go up or down. So I would just be watching this to see what happens when the stock market opens up tomorrow, just to see how to trade it. If it was to go up, I'll be waiting for it to get to 52 before I make a decision. Like if it was to get to 52, I'm probably thinking it's going to reject this area again, and then I'll probably try to trade puts, just because I'm not quite sure if it can continue to rise up currently at a fast rate. Let's look at the daily to see what we're looking at. Yeah, so the daily again telling me two different things. The stochastic RSI level is getting to that oversold region. And then we just had a crossover to the downside on the MACD, so I would just be a little bit careful to try to trade this upwards. And then we have that RSI level pointing upwards, so it is trying to get to the oversold region. So this is like really in no man's land. It can go either way. It's like 50-50 to me at this point. And again, if it was to continue to trend upwards, we're probably going to get it to 52 and then try to see it reject from there. If that was to happen, this could be making a double top. We have price, won't draw it all the way up there, but we can just say we have price going up. Coming down. Maybe we see it try to come up and then start to trend down from here and then testing that $45 range. We could see that happen, so I would just be a little bit careful and wait this one out, because I'm not quite sure which way this can go. It did reject this 20-week moving average, and it's trending upwards. So I would just be a little bit careful with this one. That MACD crossover that's to the downside is telling me that this could potentially go down, and also the stochastic is also pointing downwards as well. But I'm a little bit confused with it because of the RSI. So for me personally, I wouldn't even look to trade this stock at the moment. I would just wait to see what happens and wait to see all my indicators align up the way that I would like them to.
Right. Thank you.
Yeah,
I
absolutely.
appreciate it.
Yeah. Let's go a few more. Microsoft. Microsoft. Check out the weekly. See what we can have here. Okay. So Microsoft current price $416. Is getting close to testing that 50-week moving average. So we can call this basically is testing support at the current. It's trying to test support at about 408. That's going to be where the support level is at. If it was to reject that area, We'll probably see it try to break above 428. Well, we'll first see it try to get to 428. And then if it could break above that, we could be seeing this try to get back to 461. If it rejects this support level at 408, the next place we're going to probably see it try to test is about 397, 400 will be the next place that it'll try to go and test. Looking at the indicators, we're getting really close to a MACD crossover to the upside. It is trending downwards a little bit. Tried to get there and rejected it. So I would just be waiting a little bit to see a rejection. If I can see the price reject my support at 408 or this moving average, this 50-week moving average, reject this price and trend upwards, I would get a little bit more comfortable with getting into a trade, but I wouldn't get into a trade completely until after it breaks above the 20-week moving average. Once it breaks above the 20-week moving average, that'll give me the confirmation I need to say, okay, I can trade this and then I can potentially trade this up to about $462. Because at that point, if the stock was to break above that 20-week moving average, we'll see this MACD, the buying pressure, my blue line will be pointing upwards, and it probably will be closer to a crossover to the upside on the selling pressure. I have a question.
Yes. My question is, when you see it break and move to the upside, is there any way with the charts that you can time it? Like if it breaks you said around the 428 zone, 430, it could start climbing upwards to its highest high point before, like in the 460 range. Is there, like, when it breaks, say 430, is there a time frame of when you think that move up will happen? Like, can you put a time frame to the chart?
Oh, like I said, so you're asking, let's just say it breaks tomorrow when the market opens. Can I say it breaks tomorrow when the market opens my 20-day moving average or 20-week moving average? Are you asking me, can I determine when it'll get to like 430, like the exact time it'll get to 430, if it'll take a day or two? Not for me necessarily. You can probably look at lower time frames and try to get a judge off of that. You'll have to look at lower time frames though to see, okay, well, it just broke here on the weekly chart or on the daily chart. Let's go look at the 4-hour or the 1-hour chart to see how much momentum we can potentially have. That can potentially do it for you, yeah. But to give you like an exact time frame, no, I wouldn't necessarily give you an exact time frame because anything can happen. So
Okay. Thank you.
You're welcome. And then this is the weekly chart. So again, that may take for us to get to 460 back to 461 or 464, 460. That can take a few weeks. That can take like 2, 3, 4 weeks. We can see that it took from 463 to get back to 400. It took 5 weeks. 1, 2, 3, 4, 5 weeks to get back to that level. So there's no real time frame. And then it can also catapult up. Maybe it take 4 or 5 weeks. It's been trending from when it rejected this area. We can see it's been more than 4 weeks and it still hasn't gotten back up to that level yet. But that's why I like it gives you, so when it breaks above this moving average, that's just giving me the confidence to say, okay, it broke above that moving average. I know that it eventually has to get to 464. So if I was looking to do an option play, I wouldn't just have it for a week. I would probably, because this is on the weekly chart, set it out for like a month and a half, maybe 2 months, just to give myself that extra time decay that I may need in case it takes a little bit longer to get to 464 or 460.
Okay, thank you.
Mm-hmm. All right, so that's on the daily. So from the weekly chart, we got that if it rejects this area, we're waiting for it to break above this 20-week moving average. And if it breaks above that 20-week moving average, we could be seeing it get back to 464. And then if it breaks below our 50-week moving average, which is at about 408, we could then be seeing this try to get to 395. And if it breaks below that, ultimately to 375. But again, it's going to take a lot for it to break below that 50-week moving average. And if we look at the daily, we can see the way the daily is looking up. We did have a crossover to the downside on the MACD, so just be a little bit careful with that. We could see this try to test this 412 range and then trend up from there. Again, We don't want to get into a trade until after it breaks that 420 range, which is still lining up with these moving averages on our daily chart. So moving averages, if we can see it break above these moving averages, we could be seeing that trend continue to trend upwards. With that, we can see that our 20-week moving average, or 20-day moving average, excuse me, is pointing upwards and it's about to cross over our 100-week moving average. So anytime it's crossing above those moving averages, that could continue to rise to stock up, especially if the 20-week moving average is pointing upwards. So that's another thing to look at. And then the fact that we're testing moving averages right now as our support. A lot of times when we see those tests, we may see it get a little bit under there, but for the most part, we're probably going to see it reject that 200-day moving average. So if we can get that rejection on that 200-day, again, that's another bullish indicator, and that's going to give us more confidence to go ahead and get into this trade. And by that point, if we're shifting upwards and we're getting to that 420 range, that's going to cause that MACD to point upwards so that our buying pressure can break back above our selling pressure. And then also our stochastic RSI level will be pointing upwards, and that RSI level will be pointing upwards as well. And the RSI level is already at 44. Remember, the sweet spot is 45 to 55. So with that, that'll be pointing upwards, and it'll probably be at like 50, maybe 52 at that point. So it's overall looking like a good trade. You just want to wait, get your confirmation, and once you have your breaks on those moving averages, you feel more confident getting into that trading, trading it to the upside. Any questions on Microsoft? All right, let's look at MU. Take a look at the weekly. So it looks a little bit like, so MU is looking a little bit like Microsoft, what we just saw. We drew this as having a potential double bottom. So we just needed to break and hold above our neckline area, right? So this neckline area at about 110, 109 is the area that we're looking for it to break. This is setting up to be a nice little play, especially where the MACD is at. Buying pressure is below the selling pressure, but it's getting closer and closer to that crossover to the upside. So that's always good. And then pair that with where the stochastic RSI level is at. If we was to have that crossover, that could cause this stochastic to also continue to go up in value as well. So all we're really looking for and we're waiting for here is a crossover to the above this neckline area. So because the price is below the 20-week moving average, that's going to get this 20-week moving average closer and closer to our neckline area, making it an even stronger resistance. So once it breaks above, and then instead of having the neckline area as your resistance, you can say once it breaks above my 20-week moving average, and it can stay above there and not just reject it. How we had this week, we saw it got to the 20-week moving average, but then it rejected it. If we can have it close above the 20-week moving average, we'll then be seeing Micron try to reach back to this high level here of about 134 or 133. So we could be seeing Micron get to about 133 in the next few weeks, maybe a month. All we would really need to happen is a break and a hold above our neckline area at about 109, 110. So we can see the price break and hold above that area. That could give us that bullish momentum we need to continue to see the stock price increase in value. And that's on the weekly. So again, that may take a few weeks, maybe a month for it to get back to this level. If we was to look at the daily, see if we can see some spikes happening this week. It's really, I can't really tell which way it's going to go, honestly, right now, just looking at the indicators at a quick glance. We'll just need it to break up. I would just wait until it break above our neckline area at 110 and stay above that area. Because right now we're currently in the middle of our support and resistance, and we can draw another resistance here at this 200-day moving average, because we know it's going to come and try to test this 200-day moving average, and then we can draw another support here at our 50-week moving average we have here, which is at about 97. So we could be seeing MU try to get to 97 and reject this area. or we can see it try to break above this 200-day moving average, which is at about 105, and try to come and test this 109 area this week. I'm in the middle just because of how it's set up. Again, the stochastic is in a neutral zone. We're really close to a MACD crossover to the downside. So I would just be a little bit careful with trying to trade this aggressively this week. I would really wait. And I will really be waiting for us to break above that neckline area and stay above it before I get into that trade to the upside. Yeah, that's what I'll be doing with this one this week. Any questions on MU? Perfect. So overall, we have.
Oh, one quick question. Do you think it's gonna go, because the thing about MU is it's given us a lot of buying opportunities on the sort of, because it comes down to and then it bounces up. Do you think it'll go back to sort of the $90 to $100 range? Like 90 to 99?
Coming week, it could. So again, this 99 range is like right here. So it could happen this week, especially the way like the daily is looking is that's why I say I wouldn't be too aggressive because I can't really tell you which way this one is going to go just looking at the indicators because they're telling me conflicting data, which a lot of times means that we're probably going to see some type of a pullback, a cool down, and that cool down could get us back to this like $97 range. It could get us back to this support because we're about to come and test, or we're probably going to try to test this 200-day moving average, which is at 105. So we could see it test that area and then pull back to this 99 range. So I would just be on the lookout and wait. You can put it on your watch list and have some like notifications if it hits $99 to look at it to see if it can reject that area or if it's going to go lower. But if it hits 99, that'll probably be where it's going to reject. Just look, because this is going to be two moving averages that I have to break below before it gets to 85. Now, if it breaks below them and can stay down and can close below those moving averages, then we'll see it get to 85. Yeah. So I would just really be on the lookout for this. It could happen though. That's why I would be on the lookout and just be waiting this week for this one. I'll just be
Thank
waiting.
you.
Mm-hmm.
Just thank you.
Problem. Good questions. Okay, so I'll just MU coin. Time is it? 7:30. Okay, I'm gonna go over coin and then I'll go over. Let's check out the weekly to see. All right, so coin currently at 170, and we see that it has we drew previous support and resistance, and I can clear this. I did it again. Okay. So we have current support here at about 160, 164, 165 is our next support level. Current price is 170, so that's like a $5 decrease. If it was to break below that, we'll be seeing this get to about 150, and that's where I'll be trying to see what happens. If it was to get there, then this could be making a double bottom potentially. So I'll just be on the lookout. Just the way we could see that rejection happen at 150. Currently, it's trying to test this 50-week moving average, which is going to be our first resistance level. And if it was to break above our 50-week moving average, we could be seeing this get back to about 200, 203 as our next level. Looking at the indicators, RSI level is pointing downwards, and the stochastic is pretty low, so we could be seeing this try to trend upwards. And we're really close to a MACD crossover to the upside. So all I'll be doing with this stock is I will be waiting to see if it's going to reject my 163 range. If it breaks below it, I'll then be waiting to see if it can reject 150. And if it can reject 150, at that point, we'll probably be seeing the MACD get closer and closer to where the buying pressure will be be trying to point upwards and trend upwards. And that can give us the momentum we need to see this start to increase back in value. And at that point, if it's at 150, we're going to be seeing it try to get to about 180. And if not, if it breaks above this 200, or excuse me, this 50-week moving average, we could be seeing this get to about $200. And that's on the weekly. You look at the daily. We were getting really close to a MACD crossover to the downside. It rejected that area. We can see that it's rejecting our 20-day moving average, and it's trying to trend upwards. So for this week, if we can stay green, we'll probably be seeing this get to about 185. Because, and I say 185 just because that's going to be it may be a little bit lower, but that's pretty close to our 50-day moving average. So that's going to be our next level of resistance. And the fact that we have a rejection on that MACD, if that's going to continue to trend up, it's going to point up our stochastic RSI. We still have a lot of room on that stochastic to go up. And with that, we could be seeing this get to about 185. So what I'm looking for is, can we open up green on Coinbase? And if we do, we'll probably be seeing this get to 155 this week. And that's what I'll be looking at. All right. Any questions on Coinbase? Okay, Ty, I'm going to skip CMG for now. If we have time afterwards, I can go over it during the session. If not, we can make a video for you and put it in the Discord.
Thank you.
No problem. So I'm going to check out AMT. Check out the weekly. Okay, so the stock still in all-time high levels. If it continues to go up, the current price is looking at $395.97, and we can see that from closing. Yep, $395.97. If this was continue to go up, because we're in all-time highs, I always like to treat it as $5 increments. So the next place we could potentially see this get to is about $400, just because that's the $5 increments after all-time highs. Now, if it's going to reject this area, we're going to probably see this try to trend back down to about 360, 370, because that's the next level of support we have for it. And then if it breaks below that, we'll probably be seeing it try to get to 340. Now, looking at this, it does have a little bit more room to get to that 400 range. Looking at where the RSI level, while it is getting close to that oversold region, overbought region, excuse me, we still have a little bit more room to the upside to go. And then that stochastic RSI level is showing us that we do still have a little bit, because we know a lot of times with the stochastic, it likes to get back to that 100 zone. So it's sitting at 68. So we could see this trend up a little bit more. And then we had a MACD crossover to the upside. And with that, again, we could be seeing it probably has a little bit more room. And that little bit more room will probably get us to about 400, maybe 405. But it's probably going to be like 400 as the next level if it was to continue to trend up. And let's look at the daily. Yeah, so the daily is showing us, I mean, we have a little bit more room. We can see it hit the $100 range on the 100 value for the stochastic, started to trend down, and now it's starting to point upwards. It might be trying to get back to this 100 range before it starts to cool down completely. And with that, that'll cause this RSI level to also get into that bought region at 70, and then that's going to be a nice place for it to start to cool down. We are testing support. Resistance currently at 379. If it breaks above that 400, if it rejects it, it's going to probably be you can draw a little bit tighter support if you wanted to at 380. But overall, if it rejects this, we're probably going to be seeing it come and try to test this 20-day moving average, which is currently sitting at about 366. And with that, that's going to cause a MACD crossover to the downside. So I would just be a little bit careful, because with that crossover to the downside, we could see this drop even more than to just 367. So I would just be a little bit careful with that, just because we have that MACD crossover that can potentially happen. With that crossover, we could be seeing this get back to about 350. About 355, 350 as our next level. Any questions? I know it's Ross. I'll take a look to see. Okay, perfect. All right. go over email, and then I'll go over one more, and then I'll pass it out to Ladarius. I see we're getting crunch on time. All right. So let's check out last stop. All right. So currently have RSI level pointing downwards, sitting at 58 on the weekly. Stochastic RSI level is pointing downwards. Looking at the MACD, is getting closer and closer to a crossover to the downside. We saw that we currently tested what it was all-time highs. So if we go back, currently tested all-time highs. So that's our resistance we can draw at about $2,146. Current price is just a little bit under $2,000 at $1,960. This is a nice level for support. So if we can break below this, which we kind of did, if we can hold below this, the next place we're probably going to be coming to see this test is going to be here, which is our 20-week moving average and a nice little level of support drawn from this level. And that's going to be at about $1,800. So we could be seeing this potentially get back to $1,800. And with that MACD crossover to the downside pending and where the stochastic is at, I'm thinking that's probably where we're going to come and try to test this week. Maybe it may take a week or two for it to get to that level. Let's check the weekly. The weekly is, we're seeing we're gaining separation from that MACD on the buying pressure and selling pressure. The stochastic is pretty low. We could see it trend a little bit more downwards. The one thing that I'll be looking for is, can we again break below this area, this 50-day moving average, which is pretty close to our support level that we drew. If it can stay below that area, we're probably going to see it continue to trend downwards and try to get back to this $1,800 range. That's what I'm seeing on this stock. Now, if it was to reject this area, we're probably going to come and see it try to test back to about $2,000 this week if we was to reject this 50-day moving average we have here. So if it rejects this 50-day moving average, we're going to be seeing it try to get back to the 20-day moving average, which is at about $2,000. Any questions? All right, so I'm going to pass it back off to Ladarius. And again, if we have time afterwards, I'll go over CMG and Shopify. Thank y'all.
Cool. I appreciate it, Mark. Actually, Shopify was already on my list, so I can knock that one out.
I was hoping that it was. Perfect.
Yep, Shopify. Matter of fact, we can start with Shopify. All right. Got a few on my list. Let's start with, so now that we've discussed value and growth stocks, let's talk about some growth stocks first, and then we can look at some value, and then we can look at a blend of the two. Has both characteristics. Was more on the value side at the beginning of the year, and now is moving into growth because of interest rates and inflation. All right, let me share my screen. Which screen am I? Nope, that is. There we go. All right, let's adjust this here. All right, so Shopify. Looking at Shopify on the weekly, I also think that the interest rate cuts are going to help Shopify. Also, Shopify had earnings. The last earnings it had was really good. I didn't expect to see an earnings surprise at 27%. The revenue, I kind of knew it was just going to be pretty much the same, but the earnings surprise was nice. Also, management, CEO, CTO, CFO, so on and so forth, are saying that the year is going to look, the rest of the year should look nice for Shopify going into first quarter of 2025. We also have to remember that we're going into the shopping season, right? So we're going into e-commerce and retail season pretty much, which is October, November, December. So you have Halloween, you have Black Friday, Thanksgiving, Christmas, and then you also have right at the end of December, you have New Year. So whole bunch of sales, whole bunch of things that are going to be moving around as far as e-commerce. And I think Shopify, Amazon, and those in that sector could see some growth. Right now, Shopify on the daily is trying to form a flag. It went up. Let me actually zoom in. So strong move up from about what is this, 66. It popped up. It touched our support, broke through resistance, is moving higher. That 50 MA is about to cross that 100 MA. So if we can get that 50, no, that's a 200. I'm sorry. If this 50 gets back above this 200, the last thing we need is this, and then we'll be back in the right order that we had before, back in December of 23, where we were making a crazy run, went all the way up to about 90 before we pulled back. So it's climbing, it's scaling back up. And honestly, this was a choke point. I really like Shopify, so I was watching it for a minute, but this is a choke point that I really wanted to see a breakthrough, which is at about 83. We can call it 85. 83 to 85 is the range that I was watching. And now it looks like we're moving full speed ahead. This candle here that we received on Friday was a really nice candle because we were going down. This was making a nice falling wedge. You can see the whiplash happening. Every other candle, you have a green candle and then a breakout to the upside. So it looks like we're probably going to be continuing that momentum. I want to see if we can break into the 85 range. We have space on the RSI at 66. The MACD is crossed back over. It went down to the downside for one little pip, and then it broke back to the upside, which shows the strength of the uptrend. And then you look at that stochastics. That's beautiful. We're at what, 33 out of 100, and it's making a sharp, jagged move back to the upside. So again, I'm waiting for a break at about 85 before I take action. But if we can break that 85 line and get a candle above it, I need a confirmation candle. Then I think that we can go and tackle that 90. And after we tackle 90, we can zoom out some and see that we're actually scaling up this side. And then we can start to take that 105 out. We take 105 out, we can start to move up to the 120. So 100 to 120 is my target for taking profits. I'll be taking profits first at 120. I'm sorry, first at 105, second at 120, and just waiting for a break into this 85 to 90 range to where I can play some options and move to the upside. But again, looks nice. I threw it on my list because of what the CEO was saying from the last earnings. We do have earnings coming up on Halloween, so it's going to be interesting to see what happens. But it's in a good position right now to continue its run. Let me make sure I'm not missing anything on the weekly. Nope. Yeah. Again, if you want to know if LJ has been looking at the stock a lot, all these blue lines will tell you how much I've charted or watched the stock. So has space. It looks like a pullback was necessary. Stochastic is maxing out on the weekly. So we may see some consolidation once we get up to 85, trade sideways to build up some momentum, let that stochastics and normal RSI cool off before we move higher. But over the next few months, the next quarter, it should be a nice quarter for Shopify. And then again, I'll be paying attention to earnings. Any questions on Shopify? Cool. All right. This one is controversial, but I think the Chinese trade is back. Baba, we was trading this. We traded this one, like a year and a half, 2 years ago. When we were in the bear market for the U.S. market, so we were trading Chinese stocks. I think Baba is back. You can see how it's been making a crazy run since this level right here at about 85. Last time it broke 85, it reached up to about 90, and then it came back down for consolidation. This time it broke 85 and went on a crazy run. I think it's in part due to China pledging to I want to say it's a 500 billion yuan stimulus package. And anytime you stimulate the market with that much money, you're going to see, the country stock move. So if you're looking for stocks for the Chinese trade, I would look at Baba and I would look at JD. So I'm not saying that this one is the one that I'm trading right now, but I do like Baba. I think before China started to extract value from the company, it was easily a $400 to $600 stock. Right now it's at 114, which I still think is a steal if you look at how much money they generate. If you pay attention to their earnings, let me see, can you find that here? Yeah, look at the revenue. 33 billion for the quarter, which is crazy. But I think that again, with the infusion of that 500 billion won, we can see Alibaba continue to move. For me, I want to see a break at 120. The reason why I'm saying that is because of this. And I just knew that by heart because, again, we were trading this one a lot. A break at 120 will tell us a lot because it'll get us out of this. We'll start to bend the corner and come out of this period of consolidation. We break 120. The next level I'm looking at is 140, and then 160, and of course 180. So $20 pops to the upside is what I'm watching after 120. But 120 is a hard one to beat. That was one that we watched. Again, you can see how many times we tested 120 back here in 22. Like I said, in 22 we had a bear market for the U.S. market, and this was an easy trade to go against the bear market that we had in the U.S. So now 114, I'll break at 120, and then we're good to go in my opinion. Do we have any questions on BABA? And again, if you want other options, I think Baidu, JD, and Tencent can be other ones that you can pay attention to. But I think BABA, for my opinion, leads the way because they make a lot of money, a lot of money. So I like BABA in my opinion for the Chinese trade. Let me check the chat. Oh no, he's just telling Mark, thank you for the great analysis. All right, cool. Let's keep it moving. All right. So growth stocks, those are two of the growth stocks that I was paying attention to. BABA used to be a value stock. Well, I guess you can call it a value stock, but it's moving like a growth stock in the last recent weeks because it went from 85 to 115 in a few weeks. So growth like tendencies, and it used to be a major growth stock. So I think it's going to return to fame as long as China doesn't pull back on that pledge and they actually go through with it. I think that we'll continue to see the Chinese stock market rip to the upside. All right, Chevron. Chevron is a good value stock, pays a really nice dividend, and I think at this point is ready to go. Right now, it's making an inverted head and shoulders on the weekly. Let me turn on my other. There we go. It's making an inverted head and shoulders on the weekly. We also have a pendant MACD crossover to the upside. And it's been testing this bottom. This is a really strong support around 144. So you can see this has been support since what, February of 22. It's tested it about 5 or 6 times. Actually more if you count all of this in this area, but it's making an inverted head and shoulders, and it looks like it could be going back up to the 160 to 165 range. If it breaks out of that 160 to 165 range, then I'm ready to see a test back at about 180. If you look at it, it's been consolidating for a while. If you've been holding the stock for this many weeks, really nice dividend payouts that you've been receiving, and it's been building up, especially if you set it on DRIP, which is the dividend reinvestment plan or program, depending on the brokerage. But I think that now Chevron is preparing itself to move back to the upside. So I think a stock that could go for 180, that's at 150 right now. It also pays a nice dividend. And again, if it breaks this 180, I think it's going to rip to the upside. We could see it get up to about 200 to 220 after a move. But again, it's a value company, so it's not going to happen in 2 weeks, 3 weeks. I mean, it could, especially with the geopolitical tension and the wars and all the things that we have that's surrounding the Middle East and, you know, the oil producing countries. We could see Chevron pop. But from just what I'm looking at, 49 on the RSI for the week, which is nice. Inverted head and shoulders that it's making while testing a heavy resistance area. Also, the MACD has a pending crossover. It's getting closer to a pending crossover to the upside. And then you can even see that inverted head and shoulders that formed on the stochastics and is at 60 out of 100. So nice setup for Chevron. It may take a little time. Again, if you're looking for something to buy and hold and to just, you know, build up over time, add some dividends, I think that Chevron could be a nice ticker to pay attention to. Any questions on Chevron? Let me take a sip of this smoothie. I'm running out of breath. All right, cool. Next one, This Berkshire is actually, I think Berkshire is the stock of the week, in my opinion. Really, really nice setup. Real nice channel that has been stuck in, and it's actually been stuck to the top side of that channel, which is good for me. And this is on the daily, so 57, or we can call it 58 on the RSI. It's pointing up, is really trying to break through this level at about 462, 463. We get a break at that level, then we could be going back up to about 480 right here. And we have a pending MACD crossover to the upside, and that stochastic is at 53 out of 100. So in my opinion, if you're trying to figure out which stocks to pay attention to, unless you have a high flying growth stock, I think as far as value companies, I think Berkshire this week should be the one to pay attention to. Again, fair RSI, it's testing resistance, has space to move back up to all-time highs. MACD crossover has been just been waiting for a minute to finally cross, and then that stochastic looks really nice to the upside. So if you follow any of our pages on social media, I'm actually going to be doing a post about Berkshire. Again, I think it's a stock of the week, and we'll see if it breaks. I think it's going to break. It has everything it needs to break here. If it breaks here again, we could be looking at 470 to 480 around all-time highs again, and still just it's a great stock to hold as well. So if you're looking for a swing trade, this could be one. If you're looking for a stock to hold for a while, this could be another one as well. Again, they have about 270 to 280 billion in cash on hand, and at some point they're going to start to deploy cash. Get tongue tied. And once they start to do that, I think that the stock is also going to see a rise to the upside. So Berkshire looks nice. This is the daily. On the week, it looks nice as well. I thought that this crossover, this MACD crossover to the downside was going to be something I had to worry about when it was starting to move down, but you can see it starting to make this crescent shape and starting to go back up. And there's still some space in between for a crossover, so it will have to have a really harsh rejection on the weekly to get this crossover to the downside. But I think it just cooled off and is going to crescent back up to the upside. Stochastics, I'm sorry, I said stochastics. Normal RSI is at 65, but this is the weekly, so it's going to move a bit slower. And then if you just look at the pattern that it's making, this is a bull flag, right? Strong move up, pull back on 2 candles, and it's pulling back up for a break to the upside. So mid to long term, I'm thinking 5 to about like 540, 500 to 540 is what I'm looking at once it finally breaks out of this channel. But again, this is on the weekly, so it could take some time. But yeah, strong move up, pull back, another move to break the upside. We get back up to 480 is breaking it. I'm calling it right now. But again, Berkshire, nice position financially and nice position as far as technical analysis. Stochastics, I didn't even pay attention to that. It is at 34, pointing back to the upside, and we can go all the way up to 100. So really nice setup. And I'll be looking to set up a trade for this one this week for sure. Do I have any questions on Berkshire? Questions, comments, concerns? Cool. The last one is a blend. This is the one that I was talking about. Traded this one a few times. This is a blend of growth and value. This one just decided to take off out of nowhere, but this is a home building stock pretty much. And I think that the more that we get these rate cuts, it could stimulate the housing market further on down the road. And I think that Leonard could be one of the stocks to appreciate in value because of that. So right now it actually pulled back. It was really trying to go on a run. At one point it was at about 193. Which I think is great. You can see that once it went down to 140, it just ripped to the upside. So that's what, 140 to about 190. That's a $50 move that it made after just making what, 100 to 170, just after making a $70 move. So this stock is ripe to run, but I think right now it's on a pullback. So I have this one on my watch list to see if it's going to break 180. If it breaks 180, we'll be looking at about 176 to 177. That's where I'll be looking to starting to buy to the upside. And if we get this MACD crossover, it could go even lower. We could see 170, but I think at 176 to 177 is where I'm going to start to buy in at, and just wait for a nice reset to dollar cost average on the way down. And then once it moves back up to 190, 200, so on and so forth, we'll be able to get that stock appreciation. It also pays a dividend, not a crazy dividend, but I think 50 cent is a nice dividend, because there are some stocks that are at the same price point, about $200, and they're paying 10 cent, 15 cent per share. So I think 50 cent per share, and the stock has been climbing the way that it has been. Again, back here is at 100, now it's at about 182, and this is what, July? This is just July. This is not even the beginning of the year. This is back in July. From July to now, it's climbed $80, give or take. So yeah, Leonard, another one I'm paying attention to, and yeah, this one I recommend put it on your watch list as well. And yeah, if you have any questions, just let me know. All right, that's all that I have for the week. What time are we at? We have about 10 minutes. Mark, do you want to do a quick pattern of the week, or how are you feeling? We got 10 minutes. If you can't do it in 10 minutes, then we can push it to next time.
Yeah, we could probably push it to next time. What I could do is I can go over CMG for a tie, and then we can close out after that, since I missed it.
Yeah, that worked.
All right.
All right, cool. So I appreciate y'all, and I'll go ahead and pass it back to Mark.
Perfect. Share my screen. Let me grab my charger. Plug this up. All right. Share entire screen. And let's take a look at CMG. Let's take a look at CMG. Chipotle. Let's see here. All right. So looking at CMG, currently resistance will be at this 20-week moving average. We can see it came here 3 times and it rejected it all 3 times. So we can have resistance here, which is at about $58.19 is where resistance is at. For support, our first level of support, we can draw it here at our 50-week moving average, which is at about $53.90, $53.83 to be exact. That's going to be the next level of support we'll have. If it was to break below this, then we'll probably be seeing it try to get back to around this area, which is at about $49.50. So we could see this drop down to $49 to $50. Now, if it was to break above our 50-week resistance that we have here at the 20-week moving average, we'll then be seeing it try to get back first here to about $62, and then if it breaks above that, we'll probably be trying to see it get anywhere from $65 to maybe $68, $70. So we could be seeing it get to those levels. Now, looking at this weekly chart, it's setting up to break above the 20-week moving average. Just looking where the RSI level is at, where the stochastic is at, and we're really close to a MACD crossover to the upside. All of those are bullish indicators telling me that this is probably going to break above and start to try to trend back up to $62. So what I'll be looking for is, can we break above and hold above this $58 range? If we can break above this area, and let's say it looks like on a smaller time frame, like the 4-hour or hour chart is looking like it's trending upwards still, when the market opens up, you can probably get into a trade and try to trade this to the upside to about $62. Now, it may take a few weeks for it to get to $62. It may take 2 to 3 weeks to try to get there, maybe even longer. But overall, it's looking like Chipotle is going to be trending upwards from the weekly chart. If we was to look at the daily, we can see while we had a MACD crossover to the downside, we could be seeing this try to cross back over to the upside. We have a lot of activity happening currently on the daily chart. We can see 3 moving averages, or 2 of them are going to be being treated as our support levels. So we have our 200-day moving average, which is sitting at $58.87. And then we have our 100-week moving average, or excuse me, 50-week moving average, which is sitting at about right here at about $55. So that's the two areas that we could be seeing it try to come and test if it was to trend downwards. Now, if it rejects this first area, all we're looking for is we're looking for the on this daily for it to break above $58. If it can break above $58 and hold on one of those days, we'll probably start to see this trend upwards and start to trend back up to that $62 range. And again, stochastic RSI level is really low. RSI level is pointing upwards. That MACD crossover to the downside could just be for the moment, and we could see this start to trend back upwards and cross back over to the upside. So currently what I'll be looking for is, can we break above $58 or this 100-week moving average? If we can break above our 100-week moving average, 100-day moving average, excuse me, we'll start to see this trend back upwards, and especially on the weekly, that'll give us confirmation as well on the weekly that it'll be going back to 62 the next few weeks. But that's what I see on Chipotle. Do I have any questions? Signaling market drop. That probably Ladarius can probably answer that question better than me. I'll see if Ladarius. Are you able to answer Ross's question? I'm not sure.
Yeah, as a run on gold signaling the market drop. I mean, I think that when gold starts to increase in value, it's just when people don't trust banks. It doesn't signal that the market is going to drop. I saw the same thing happen when we were going into the bear market of 2022. But it doesn't necessarily mean that. It's just people are being cautious. We're having a shift in policy. And I think that people moving into gold just in case, but then you may also see the prices of gold go back down to normal levels. But I mean, the fact that it is climbing is a cause for concern. You just got to pay attention. But right now, I'm not seeing it as a market drop. And again, if the market did drop, I mean, the SPY is up like 20% on the year. So, I mean, if it pulled back 10%, it's still positive. So is it going to go negative? No, I don't. It's an election year. If anything major happens, I think it'll be after the November election. After the November election, that's when the real trading happens. But right now, nah, not for now. Ross, to answer that question. All right, and we are right at time at 7:57. Cool. So we appreciate everyone for hopping in. Let me stop the recording so we can get that process for the people that couldn't make it.